Hi everybody, welcome back to the basics of the portability election. This is part 4 where we're going to explore some of the basics behind where and how we actually make this election. Now before we get started, I want to remind you this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. So, what have we covered so far? Well, we've covered a lot of grounds in terms of background, eligibility requirements, and even one of the more difficult issues within the portability qualification, which is what happens upon remarriage. Some of those remarriage issues will pepper themselves into today's discussion, where we're going to dive into the concepts behind making the election on IRS Form 706. Now, I'm going to assume you're somewhat familiar with the 706 and reporting on it. If you're not, you may still get some value out of this, but going forward, the next few parts, it kind of helps to know what actually goes into a 706 and the actual reporting obligations on that return. So, in the big picture, assuming we've met all the other requirements we've discussed prior to this, and even some that might be coming up, the way you make the portability election is on IRS Form 706, which is the estate tax return used for U.S. citizens and residents. And this election, as we're going to see, is fairly simple. It's made by completing Part 6 of Form 706. Now, that part is really going to be derivative of a lot of the other parts and schedules, but we'll get to that shortly. So, big picture real quick, here is the top part, at least, of Part 6. This is where we actually make the portability election. Now, I want you to note a few things. One is Section A, opting out of portability, where if you do not wish to make the portability election, you would check that box. We'll talk about in a minute what happens if you don't check that box and then leave the rest of the form blank, at least in terms of hypothesizing. But for the time being, we're going to skip Section B because we're going to come to that in a later discussion. So really what we're going to deal with is Section C. Now, I've really kind of highlighted some of the boxes that will come into play here. We're going to skip some of these because these are calculations designed to only apply in limited scenarios. And I'm also going to include in that line 3, because if you have any gifts on which gift tax was paid or payable during life, what the 706 has you do is go through and recalculate the gift tax that would be paid as if those gifts were part of the gross estate and transferred at death. So, depending on an overpayment or underpayment, you could get a credit against those gift taxes, depending, which could increase overall the DSUI available. So that's the only reason I've highlighted line 3, but really what we're going to be concerned about are lines 1, 9, and 10. So we can see on line 1, it refers back to a previous line, line 9D from Part 2, tax computation. All this is the applicable exclusion amount that the decedent had available, which includes both their basic exclusion amount, currently $12,920,000, and also any DSUI left over from a prior predeceased spouse who had possibly left that. Now, ultimately what we do is we walk through this, and on line 9, really what we're doing there is we're pulling over the difference between whatever applicable exclusion amount was reported on line 1 minus the taxable estate and adjusted taxable gifts, which, as you might recall from a prior bullet point in the last part, was really the determination of how much DSUI is left over and preserved for the surviving spouse. And then you net that out, and we end up with the amount on line 10. Now, we see in parentheses it says enter the lesser of line 9 or line 9A part 2. Remember how last time I mentioned that if the deceased spouse, in this case, has DSUI left over, that they could use it for transfers to their own surviving spouse, but they couldn't preserve that DSUI for that surviving spouse. That's really where we see this mechanism play out, because ultimately you can only reserve the greater of, or really the lesser of, the applicable exclusion minus taxable estate and adjusted taxable gifts, or your basic exclusion amount itself. So, really this kind of is illustrated on this slide, where once again we want to emphasize these core concepts, that the math ultimately is derived from knowing your taxable estate and your adjusted taxable gifts, which really require completing the rest of the 706. We've got to go in, report the values of assets, and know how much their estate tax value might be, and pull those out as part of the taxable estate, and also take out any deductions as well. So because the taxable estate is the gross estate minus all deductions, as we see in the second bullet point, this emphasizes a prior point I'd made, that any marital and charitable deductions claimed by the estate of the first spouse to die will increase the disuie dollar for dollar. However, in that line as well, we also have economic deductions that could come out. Now, we need to be careful on how those come into play, because if taken from property that qualifies for the marital deduction, it can create a circular calculation that spirals out of control. We're not really going to get into that today. Now, in terms of value reporting, that tends to be the most difficult part of the 706. So when we look at the value, what we're going to find out later on is that there is possibly a way to streamline reporting. There are some detriments to do so, but this can at least give us a quicker way to come up with a 706 that doesn't require substantiation of every single value if, indeed, we want to preserve unused exclusion. So, again, I want to emphasize this rule where it says you can only use the disuie of your most recently predeceased spouse. So that's illustrated on Part 6, Section D, the bottom part that wasn't just shown on the slide, and we're going to look at that in a second. And really what that's going to do is it's going to allow a decedent who has disuie from a prior deceased spouse to also report that on this Part 6 and then apply it as applicable credit against any estate tax that might be due on their taxable estate and lifetime adjusted taxable gifts. So again, I want to note that's derivative of everything else, and also requires you to have the right record keeping of the prior deceased spouse's disuie. So if they simply didn't complete the 706, you may not be able to claim that here. Now, again, I want to emphasize the math of this, that with this rule of remarriage, we can only use the disuie of the prior deceased spouse, and we can't preserve any of that disuie for a new surviving spouse, because, again, we are only allowed to preserve the lesser of your remaining exclusion after adjusted taxable gifts and the taxable estate, as we saw in the last line of Part 6, Section C, or, if less, the basic exclusion amount. So if you're unlucky enough to be widowed multiple times, there are rules as to how much you can look through the disuie, and you can apply that to transfers to a surviving spouse that don't qualify for the marital deduction, but you can never preserve that disuie for the surviving spouse. So real quick, here's Part 6, Section D. As we see, we have two lines. Part 1 is the disuie received from the last deceased spouse, which is simple because it's going to be one amount. We have to enter all the relevant information there and list it out. But then we also have Part 2, which is disuie received from another predeceased spouse, but used by the decedent. Remember that rule I mentioned where you lose the disuie once you remarry and your new spouse dies? Well, guess what? That doesn't apply to any disuie that was actually applied to lifetime gifts before the death of the second predeceased spouse, which makes sense, as I mentioned in a prior part, because the use of that as applicable gift tax credit carries over to the 706 as applicable estate tax credit, since you have to report those adjusted taxable gifts on your 706. So you get to carry all this over as your applicable exclusion amount and then apply it as credit against the estate tax that's due on the combination of the taxable estate plus lifetime adjusted taxable gifts. So, some quick tidbits. One thing you might have caught, as I briefly mentioned, is that Section A has a check the box opt out. So, the big question is, what if you don't check that box to opt out of portability, but you simply fail to complete the rest of the form? Could that be an effective reservation of the right to elect portability? And the answer is most likely no, because even though RevProc 2022-32 gives us a 5-year period to file a portability return, that 5-year period is cut off once you actually file the return. Once you file the return, if you catch an error in that you didn't check that box to opt out, but you didn't complete the rest, most likely you haven't made an effective portability election, and you can only go back and amend that if you're still within the filing timeline under the original law for a required 706. So if you're beyond the 9-month filing deadline or the 15-month filing deadline with extension, you're probably dead in the water if you discover a prior 706 that didn't have a complete Part 6 filled out, including Section C, where we actually determine the amount of unused exclusion. So long story short, it's important to make this complete. If you aren't going to opt out of portability, go through the exercise of filling out Part 6, Section C, where we figure out the DSUI. And if you're using assembly software for your 706, most of the time it will automatically fill that out if you have a surviving spouse. Now, I want to also note, going back, we saw Section B referring to a QDOT, and I punted on that because that's an issue that's going to come up later, where we're going to explore the fact that a non-citizen spouse's ability to use the DSUI is limited, and you may actually have to have a QDOT in order for them to use that unused exclusion. So, what should you do once this 706 is filed and you've made the portability election? Well, record keeping is paramount. Make sure that you provide a copy, at least, of that Section 6 to the surviving spouse so they know how much unused exclusion they have available to them. They'll have to use that on their future 706 or even on a 709 if they file a gift tax return, because regardless of whether or not they intend to, remember there's an ordering rule that says if a surviving spouse has DSUI, they have to use that first as the credit against lifetime gifts before dipping into their own basic exclusion amount. Also, keep a spouse in the loop on any audits that might change the DSUI down the road. Now, we're going to talk about supplemental reporting as a part of this, maybe such as the basis consistency rules, really in the next part when we talk about value. But make sure that if you go through this exercise, the surviving spouse has that Part 6 at the very least to know how much DSUI is left to them. So what's coming up next? So I mentioned coming up is valuation issues is going to be our next part. Now that's one of the most confusing ones in terms of both the election and the non-election to streamline the reporting of value. But we'll dive into some things that are derivative of that, such as the application on Form 709 in the future. Then we'll dive back into some fundamental requirements on an intermediate level, maybe benefits and detriments, comparing AB formulas to estate planning using the portability election, the QTIP election, basis planning implications, and also, as I mentioned with the QDOT, does the surviving spouse have to be a U.S. citizen to use the DSUI? As always, if you're a tax or estate planning practitioner and you have questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com or click the link below in the YouTube notes. That'll give you a survey to provide input on any topics you would like to see, but please note that I cannot give tax or legal advice in response to your questions. And if you like my content, you'd like to engage me as a speaker for any of your upcoming events, be it an estate planning council, bar association, or in-house training, feel free to reach out. Thanks again for listening to this part of the basic supportability elections, and I look forward to seeing you in my future content.